When most traders make trading plans, they don't think about all these parts that are essential for good trading. They think about the setup, the entry, maybe some rules for the trading, but it's a very limited view of what a trading plan really is. In this video today, I'll share with you my 5 key elements of a profitable trading plan, things you need to have that I think makes a big difference for how you trade in your overall trading plan. So let's dive right in. Number 5 on this list is going to be the one that most traders overlook, so pay attention to this one especially. And of course, these other tips will be very helpful as well, but the 5th one is going to be very important. So if you want to skip, you have timestamps below, but I recommend you go through all of them to make sure you understand them properly and implement them in your own trading plan. Alright, so number 1, clear entry and exit rules in the market. Now you would be surprised how most traders don't have these clear rules. They say they trade price action, they say they look at patterns in the market, they say they look at head and shoulders, they look at the RSI sometimes, they look at the stochastic sometimes they put in the moving average. These are not clear rules, these are only principles or tools you can use, but they are very far from clear and straightforward rules. It should be very easy when you look at a chart, are my rules met or not in the market? Do I have some doubts about it or not? If you have any doubts, then that's not clear, but if you are able to look at the chart, understand if your rules are met, and then move on from there, those are really clear rules. You want to have that in place. You want to know exactly what you trade, what kind of setup, what kind of environment in the market it works well at, when you enter, when you exit, no matter if it's a loss or profit. These things should be clear, written down with no doubt about them. If your thought process is, oh, I'll enter and exit when the market gives me a sign to exit, that's not clear. Like, that's something that will make you second guess yourself. You'll always think, oh, maybe you could have exited later. Maybe I should have exited before that. You'll have doubts because your entries are always different and your exits are always different. And that's not proper for good trading. It should be very clear, straightforward. All right, number 2, the second element of a profitable trading plan, a key one, is risk management and drawdown rules. What that means is you need to know how you will manage your money, your capital. Are you going to risk 1% per trade, 2% per trade, 3% per trade? A good way to calculate this is to go through the risk of ruin. You calculate your risk of ruin based on how much percent you risk per trade. And that should give you what you can risk in the market per trade based on your stats, based on your backtesting. You need to calculate that stats right now first. There's plenty of calculators online to calculate your risk of ruin. Just do a quick Google search, you'll find one for sure. And the next part that goes here is how much money are you able to lose in the market. Now, I put a quote on Twitter recently that says the trader that doesn't want to lose is usually the one who's going to lose the most. Because the fact that if you don't want to lose money in the market, you'll force things or you'll try to stay away from trades that you should have taken, and that will cause you to lose more money over time. Now, you might think it's a good thing, like you want to be protective of your capital, but you need to be able to allow some drawdown and also kind of put limits on it. So you don't want to lose your whole account, you don't want to ever blow an account. That would be stupid, and that would mean a very poor risk management. But you still want to be able to risk a decent amount, get to a point where, based on your strategy, you're comfortable losing. But if you go beyond that, then you gotta take some time off and you gotta readjust your strategy to be able to find out why you have a drawdown in your strategy right now in the market. I did an interview last week with Etienne Crete, who was talking about backtesting on the channel here. And one thing he mentioned is the fact that he is looking at a 1.5 to 2 times the maximum drawdown from the backtest in live trading. So what that means is if in backtesting you had a 10% maximum drawdown, then your maximum drawdown when you trade live should be between 15 and 20%. 1.5 times to 2 times what you had in backtest. Because it always gets a little bit worse when you trade live. It's always a bit different. If you want to watch this interview with Etienne Crete, I'll leave a link in the corner over here. I recommend you watch it. A lot of good applicable advice in that interview. Things from a very experienced trader who's not trading for a big fund. So I recommend you watch that interview. It's also going to be linked below in the description of the video here. Watch it to understand better about risk management and drawdown. Okay, the third aspect is one that is very overlooked by most traders. Is you need to write down in your trading plan as a very key element when not to trade. Now that's opposite to what most people write in their plan. They write when to enter, when to exit, when to be in the market. But they never think about when not to trade. What are some circumstances, some situations, some places in the market where you shouldn't trade? You should stay away from the market. You should just keep your money there in the account, but not take any trade. It could be when market's really choppy. Then you have to define that. It could be when you have 5 losses in a row or 3 losses in a row. You want to maybe not trade the 4th one or the 5th one or so on. It could be when you feel confused about the market. Like you cannot see the right zones in the market. You're not sure about if the zones are right or not. You can skip these trades. There's plenty of places in the market where most traders should not trade. They should stay away from it. It could be even like big events. And you need to write down in your trading plan what these are. Because soon enough, if you don't write this down, you'll be in the market in those circumstances, and you think, oh, I can do that, no worries. I'll take trades here, it's fine. I'll take a risk. But then these are places you should not place trades in. And you want to write these down so not forget them, and stay away from these bad times. Now, sometimes most traders look for more profits in the market. They look for more trades, more returns, bigger reward to risk. But they forget that part of becoming good in trading or consistent or profitable. It's also about eliminating the bad stuff, the things that cause you profit, the losses overall. You need to go to losses in trading for sure, but you can eliminate a lot of them by deciding when not to trade and when not to be in the market. So think about this, write this on your plan. This will make a very big difference. Okay, fourth here is a more typical textbook one, is the trade management. So you want to write down in your trading plan, how will you manage your trades? That could be a very simple thing like a 1-to-1 reward to risk. You put your stop loss and then you take profit to 1-to-1 or 2-to-1 or 3-to-1 or so on. That's very simple. It could be a fixed pip amount, which I don't recommend most of the time. You risk 50 pip, you try to gain 100 pips, that could be it. Or you try to always gain 80 pips on a 50 pip stop loss, that could be it. Or it could be more precise, like how you're gonna trail your stop loss over time. I've made videos on this for strategies where I recommend you can trail your stop loss, especially the trend ones in the crypto market, but these apply really well to Forex. I'll leave a video link here in the corner so you can watch this. It will show you how to manage your trades properly and stuff you can do to capture some big profits in the market. This is very big for trends, and also if you're gonna trade sideways, you can still do the same thing. You can take some profit at a specific level. When price pulls back, you can trail your stop loss. You can adjust and take profit based on how price moves. You can exit on opposite setups, which is very crucial too. If you see a setup that's similar to yours, but in the opposite direction, you would get out. Those are all things you can do to manage your trades better. Now, you don't want to be in the market last minute and think, oh, I should do this and that now. I should do this because the market now feels like it's not moving well. That's not how it should be. It should be before that, written down in your plan. And you should know how to do it based on what circumstances they are in the market. And you should be able to know, if the market does this, I'm gonna do this, right? It should be an if-then process. If the market is like this, it's choppy, then I'll take profits faster. If the market is trending and making very nice lower lows and lower highs, I'll trail my stop loss to the highs over time. And I'll keep it like this until I get stopped out. If the market is pulling back strongly, I'll get out of the trade. Like, those are all things you can write in your plan, and these can make a big difference. You can have multiple trade management depending on how the market moves and how you're gonna manage your trade at this moment. All right, now we come to number 5. The fifth thing you need to have in your plan to make it profitable. This is a big, massive one because it's gonna prevent you from blowing up the account and not progressing in trading. You're gonna have a steady flow of progression, which is very crucial, of course. Just before we get there, if you're not subscribed to the channel yet, make sure you hit the subscribe button below and click the bell next to it to be notified of future videos. I post videos like this 3 times a week, 1 interview, and then 2 videos of myself teaching you stuff about trading, some strategies, some tips, some tools to be able to become a better trader, have more freedom, and eventually live on your term while you trade full time. That's my goal, to be able to help you get there. I'll do everything I can. I have students who got there before, and I'm really proud of them. So I want you to have the same thing, of course, in your life. So click that subscribe button. Also comment below if you have any thoughts so far. And let's get to number 5 now. Now, the 5th thing you need to have in your plan, massive one, really big one, is an implementation plan. Now that might seem like, oh, like what kind of stupid plan is it? Well, it's very crucial. You need to know how you're gonna implement your strategy when you get to trade in the market. So what that means is you need to make a plan, basically how you will scale up your trading. This should be the most exciting part because you see how you can scale up and progress over time your trading account, how you will grow, how you become better, how you will use the strategy you have now to put it in the market. So what that looks like is, let's say you are now backtesting the strategy. So that will be the first step, backtesting. Let's say you decide to do 3 pairs, and that's your goal for now, backtesting. Now step number 2 in your implementation plan will be, now that you've backtested your strategy, you will go demo, and let's say for 1 month, 1 month demo. Then the next step would be you go live on a small account, on a $1,000 account. Now you decide these exact numbers, this time frame. That's for you to decide. There's no right or wrong answer here. You can skip demo if you want. You can do demo if you want, up to you. You can go on a $5,000 account, a $1,000 account, a $10,000 account. It's really up to you here. So then you go there. You go on a $1,000 account live. If you have your right performance you've had in demo, if you are profitable, let's say. If not, you go backward, do some more demo. Then you keep moving forward. Now, once you've done your live, if the results are good, which means they are profitable after 1 month, you'll increase that to, let's say, $2,000. And then you trade that for a while. If it's profitable after 1 more month, you'll go to $3,000, $4,000, or maybe $5,000 straight away. And then you keep going like this. And then you keep putting some increments for yourself on how you will implement the strategy. Now, each time you don't reach the target, the objective of being profitable or having some good results, or it could even be like following your plan. If you don't follow your plan, don't have good results, or you just do like one of these two. So you have good results, but you don't follow your plan. That's a bad thing. Or you follow your plan, but you have bad results. That's another thing you want to be careful about. If this happens, you just go back to the previous step. You work more on the demo, or you work more on a smaller account. You practice a bit more. You try to fix those mistakes, and then you keep moving forward. Then once you've done that, then you go to a maybe $10,000 account over time. Then you go to 20,000. Then you go to 100,000 over time. Like these are all steps you can take. Then you go for like a profit challenge, perhaps in between that. Those are all steps you can put for yourself on how you're gonna move forward. But then the cool thing is you have a plan. Like you know where you're heading. You're never gonna be puzzled about what you should do next. You always have a plan on how you're gonna move forward based on that implementation plan you had in your training plan. A very crucial step, and if you need any help to do that, I'm happy to help out. I've been doing this with traders for a long time. People are able to go from having no strategy at all to creating something pretty good, to training the market, to then improving it and scaling up with it to prop firms and then full-time over time. So I'll be happy to help you with that. Feel free to reach out, of course, or comment below in the description of the video. I'll do more content of this if you want, if that's something you are interested in. And with that being said, I'll catch you back here in the next video. Ciao.